Hey guys, Zari here. Hope all is well. Trust you're having a good day. It is Friday, Freaky Friday, June 20th, about 45 seconds away from the open. You can see that we have an interesting situation here where we have no Thursday candle because Thursday was a holiday, but we do have all of the Thursday partial day price action in this Friday candle. So it looks a lot more negative than it really is for today, given that the sell down yesterday in the partial New York session was included in this wick. Anyway, so we effectively have inside days here, but bullish bodies here, guys, and we're pushing up very strongly here before the New York Open. So a huge move has already happened here, as you can see from down here in this wick. It's right here all the way up to where you can see, and now we are open, guys, just open here. And you can see that this range on the 30-minute chart, guys, is 204 points. See that there? And so this is the partial session from yesterday, and this is Australia, open strong, sideways in Asia, sideways in the first half of the London session, and then pushing up here from 7:30 this morning, 7:45 approximately, when some news came out about Iran, I believe, on Twitter, and pushed things up for now. And there's the 1 minute open range, guys, about 57 points, 56.5 points on the NASDAQ and 9 points or so on the S&P. I'm going to be very patient here, given that we've pushed up so very strongly. I certainly won't be going long any moment now, given that we've also just nailed this very important zone, fairly important zone here from New York on Wednesday. So I'll be patient here, guys, and watch how prices react at that area. That, of course, is the prior day's high as well. Being Wednesday's high, guys, does not include Thursday, even though we did trade partial hours, certainly through Asia, and full London, and partial New York. So the daily candle can be a little bit deceptive. So we have an extended move here, guys, coming into the New York session from the pre-market, slamming right into a zone with a very wide-ranging candle if we include the sell down that happened on Thursday during the holiday trading hours. I'm likely to let a lot of candles go by here before even contemplating anything, guys, if I even have a trade here at all today, given that it's Freaky Friday right after a holiday too. If this pushes up, guys, I'm just going to let it go. I have no interest in chasing after this extended move here on the 30-minute chart. So I'm just watching this whole area here, guys, on the 30-minute chart. See that there? We are pushing up very strongly, but we have an extended move here by any stretch of the imagination. If you include measured moves of, say, this move here, let me just show this to you. And again, that was holiday hours, right? And then into the top candle of the open on Australia. That move has just been completed. So just showing the measured move here, guys, this leg and that leg identical, trying to push up higher. This thing could go much, much higher, of course. When buyers come in New York, there's a huge group of players there who can really move things. But it's also important to know that this is a fairly extended move, this entire leg, in fact, and we are trying to get through this zone here that drove prices down in New York, the same session that we're in right now, right? Just entered. That was also pushed down here in New York, the same session that we're back in right now. Session, New York, New York, New York, and pulling back into the open range. I will not be going for a long here, guys, for all the reasons we just discussed. And now the NASDAQ and the S&P are both pulling back fairly quickly into the middle of their open ranges. Of course, while we're in the open range, I have no interest in doing anything. I'll just bring you back when something sets up. You will notice that this failure above and this selling leg down is significantly cleaner and stronger than the jerky price action on the way up. This is more decisive, and that can be the sign of an impending change in trend. Just bringing out a marker here, guys. Nothing yet. Just measuring. I'll let you know if I go live here. Sell stop order, guys. Sell stop order right now. Stop above this blue candle here. That was the biggest candle before these choppy sideways grinding candles, and will be just above the 9 and 21, which are now in a negative moving average configuration. Sell stop order. This point right here, guys, is the bottom of the pre-market 30-minute candle. In other words, if this brings me in, it means that we broke, after all this, it means that we broke the bottom of the pre-market 30-minute candle. Right there. The moment this takes me in, we also now have a wide-ranging engulfing candle, bearish engulfing, guys, right on cue at that measured move higher. Measured, move. A bearish engulfing candle at a key zone is bearish. A failed attempt higher after breaking a prior day's high is bearish. And I'm in, guys, and I'm in. Short the NASDAQ. And now it's the waiting game. And target 1 has been hit, guys, and so the 1-hour all-or-nothing trader has left the game with full profits, and the 2-hour move stop to break even at 1 hour has moved their stop to break even because we hit 1 hour. And now we'll wait and see what happens to the rest of this trade. So why am I short, guys? Well, we have a functional inside day that eventually failed to go higher. I say inside day because of what I explained earlier about yesterday's bottom tail being a holiday trading session, right? So this is all part of the sideways grind, wide-ranging candles. We are congested here. We're consolidating. We are range-bound on this whole daily structure. We came in, guys, very extended, as explained on the open, slamming it to very key zones. Here in Asia, going into London, into New York, into New York, into New York. Bearish engulfing candle, guys, failing to go higher on this measured move. Breaking below prior 30-minute candle low, which is also the pre-market low. New lows for the New York session, 9 below 21. My stop is above this congestion pivot, fairly small, and so I gave it a bit of extra by pulling it up higher above this shift candle, the one that drove us from the middle to the bottom of the open range, and above both EMAs that are stacked in a bearish configuration. But this sudden turnaround, guys, the sudden shift to bearish, the strong impulse wave instead of the chopping up wave that was feeling very tired after this giant move up here in the pre-market, signaled toss the coin, go short. And that's where we are now, and there are still no guarantees here, guys. The buyers love to come in and snap this stuff up. But as I've mentioned many times before, a daily candle that breaks the prior day's high and immediately fails back inside the prior day's range is a bearish sign in the short term. If it's also coinciding with a large extended move into that breaking of the high, then you can double or triple that. If you're also slamming into key resistance zones, you can quadruple that. And then if it puts in a bearish engulfing candle, you can quintuple that, and so on and so forth. This is all about the stack of units of conviction. I'm going to delete these arrows now to keep things nice and clean, but you've seen the rationale. I'm going to lower this zone to the top of those bodies just to make my point, guys, right there. Zones are not precise levels, they are areas, and you can see the way it behaved there. And target 2 has been hit, guys, and so the 1.5 hour all or nothing trader has left the game as well. And there it is, guys, all 4 models fully profitable. Nice way to finish a week. Thank you for being here. Hope you have an amazing weekend, and we'll talk to you soon.